This lesson will be about false breakout strategy, about false breakout, how you can open entries, what do you need to before you open entries, and how you will set take profit, stop loss, and how will you calculate your volume per position, because everything is important, and this lesson will be step-by-step plan what you do to open entry with real examples. First, why we will speak about for start about false breakout strategy, because when we trade false breakout we have low predictable risk. It's first the biggest reason. Second, potential reward in most cases in 3, 5. I will show you examples where potential reward was in 40 times bigger. We have understandable we understand where big players can accumulate energy, because everything in this world, also in trading, is about energy, and it's important to understand where they can accumulate volume, because only when big players accumulate volume we can follow them and we can make money with them. Only in that case we will be profitable. That's why what do we need for entry? First, we need to have a key level. We need enough place for potential profit. We will speak about technical and mathematical ATR. You'll understand it. We need false breakout, and also we need ATR, average true range, or volatility. We need to count it. How to open entry? We can open entries by market. I think at this moment better to open a real chart, a real graph, and it will help you to understand everything far better. It will be this lesson. It is the mate why you bought this course, and I will show you example of my recent entries which I traded a few days ago. First. Take a look here. We built how do I start my trading day, and how do I start my trading approach. First, you need to have a place where you will write all your instruments which you will have on a list. Like here, you see walk. This is my list of instruments which I would like to trade soon, where I would like to open entries. After that, what I do, I build key levels, and I on the chart I build key levels and set alerts and wait for them. As you see, French 40 index, price close to high of 2007, very close, and one today, and price can hit it. The same on Euro 50 index, also the same on Norway krone and USD versus Singaporean dollar. Also the price close to this key level. It is a high from which price made this downtrend, and first reaction could be a good pullback, because price rolls up without any pullbacks, and there's a chance that price will do a pullback from that level. Okay. How we can open entries? First, like I told you, we build key level. It's the first things which we do. We build key level. After that, we can open entry in three situations. First, when we near a PC, we can open entry by market. Just take a look on this picture here, and this is my DEX entry. It will help you to see it better. Take a look on my DEX. German, it's DEX index entry. As you see here, price made false breakout, and to be honest, I wasn't near PC at that time, and I couldn't even set a sell entry at that time. That's why I didn't open entry. First, how you can open entry, let's speak about market entries. After that, I'll show you how you can open entries by pending orders. First, it's a place. This is a place of false breakout. And how we open entry. As you see, this false breakout, we open entry when price came back below key level. Once more, we have key level, and price came to that level and broke it. After that, what we can do? First, we can set sell pending order, sell stop, and if the price will come back, we will have sell entry, stop loss above tail, and take profit. I will show you how you can set take profit a little bit in a few minutes. Just wait for it. Once more, how we can open entry. We have powerful entry for a level, price came to it, broke it. After that, we can set buy, stop, pending order. Buy, stop, we have three types, we have different types of pending orders. We have buy, stop, sell limit, and the difference type of orders. Buy, stop, sell, limit. A few seconds. I think we will find some picture here. Yes, good explanation. I will add it this explanation, this picture. I will add this picture to our presentation. It will be here. In a few minutes I will add it, but at this moment it's important to learn it to you. Take a look here once more. We have such type of orders. We have buy stop. What is buy stop? Buy stop order placed above price and price keep going up. Why it's important? We have key level, price broke it down, and after that we set buy stop. It's pending order above current price. And when we have false breakout it is when price came below key level and came back. And after that we set buy stop above current price. The same sell stop. It's totally just opposite. We have key level, price came to that level, made false breakout. We set sell stop below current price and stop loss above tail. That's how we can open entry by stop orders. Also, you can open entry by market when you near PC. There could be situation if you trade for lower time frames. If you trade, if you can spend a lot of time near PC, you can open market orders. When can you open market orders? When price came back below key level and you nearly 2 pips, 5 pips from key level, you can open entry by market. How you can do it? When you open entry by market, price must be nearly key level. Only in that case you can open entry by market. Example here. I want to show you this example. We will discuss it in few minutes. Okay, friends, just imagine you have situation, you open a position and you open it by sell limit. How you do it? First, distance between your sell limit or sell stop or buy stop must be 2-3 pips from key level. It's a clearance because of spread. Sometimes price can bounce from key level, and because of spread it can fill your entry. It's important for price to came back. And how you open entry, like I said, in this case, after that, you set stop loss above tail. It's the best way how you can trade false breakout. Also, there will be a situation like your stop loss will be 50 pips and it will be not wise to set it above tail. We will use mathematical stop loss. I will show you how you can calculate it in a few minutes. Once more. About manual, how you can open by market. By market. When price approached to key level, came back, and price currently above key level or below key level, you can open entry by market. In that case, it's only the one way. Another situation, you can use buy stop, sell stop. I will show you an example on a chart. When you can open entry when you use pending orders. Let's open this chart. I think it's important to open such entry like British Pound Australian and British Pound New Zealand. Because they showed good entries on Monday, and for us it will be good examples how we can trade it. First, let's use British Pound New Zealand because the situation here is far more clear. You see, we have this key level. Why is this level is important? Because from this place, price dropped from 2.05 to this area. Price dropped 1,000 pips. It's a lot. And difference between this high nearly 1.5 months. You need to understand, when you have more pips and more time, it makes level more powerful. When you have like price drop only 200 pips, sometimes such levels will be not powerful. And how we open entry, how in this situation we could open entry. First, just imagine situation, you saw this level here on you face this level here on Friday. It was Friday evening, and you see the price made this false breakout. You open sell and you set stop loss above tail with clearance. I will show you how you need to use clearance, because take a look from this place. It was 11 pips, 25 pips. With such volatility of this instrument, it's better to use bigger stop loss. But sometimes even if the price will hit your stop loss, you can re-enter entry and it's okay. Just imagine how you open it. If the price approached to key level, made this false breakout, came back, you open entry. You can open manually entry here. You set stop loss above this tail, and you set mathematical take profit 1 to 5. That's all how you can open entry. Second situation could be here. Just imagine you missed this opportunity. You missed this opportunity and you open chart when price were here, and you still believe that there will be a false breakout. And what you do, you can set sell stop What is sell stop? Sell stop, sell below current price. And if price will come back, you will have entry. And just imagine, you set sell stop here, stop loss above it, and when price, as you see, price dropped with gap, here you would have entry. And another situation can be here. Just imagine you open the chart here on Monday. It was Monday morning, and you see the price here, and price already dropped down 60 pips, and you believe that there could be with huge probability price will do retest at least one time, like if with 80% probability price will do retest of this key level. Mostly, in most cases, you will see retest. And what you can do, you can set sell limit. What is sell limit? Once more on this picture, sell limit, order placed above price, and price then goes down. We have price here, and if the price will rise up, we will open sell. It will be pending order, and it will work automatically, and you will need to wait, because you can see price came to this level only after 2 hours. Only after 2 hours price hit it. That's why if you would like to go to sleep, market will work and everything will go without you. You can sleep. Once more, how you open entry in this case? You set if the price here, you set sell limit, stop loss above tail, and take profit mathematical 1 to 5 at least, and that's all. Another example of my entry, of my DEX entry, example here. The price made false breakout, and I wasn't near PC. I wasn't here because I was in Dubai. And what I did, I opened chart when I saw the price already dropped this amount of pips, this huge amount of pips. And I set sell limit above current price. And when price made a pullback, as you see, price hit my order, pending order, with stop loss here. And my take profit was here. I set take profit in 10 times bigger than was my risk. Just take a look on this. My risk was from this place to this place, and my take profit was here. This is take profit, and this is a risk. Do you see the difference? This is what I call a trading. When you have in every position, you can take in many times bigger than your risk. Here I made a mistake because I moved to take stop loss in positive area too quickly, and if I would not hurry up, price drop even far more than where I set my take profit, my goal. That's the power of key levels, because when you open entry nearly powerful places, you will get such potential profit and potential reward. Okay, let's repeat it again. We can open entry by free situation. We can open entry first manually when the price nearly key level. I want to paint it again to you because it's important for you to understand, totally to understand the situation. Okay, let's use this key level for you. It will be better to understand. We have better to use even real example which I trade many days ago. British pound, Japanese yen. Where is British pound, Japanese yen? Yes, it's a major currency pairs. Okay, British pound, Japanese yen. Real example, real entries which I trade before, and here you will see these examples. We have two key levels, and in both situations I traded. First, this mirror level, because from this area price bounced. Second situation is here. Also, we had a mirror level here. And let's open it on 1 hour chart, and it will help you to understand better how to trade it, or even on 4 hour chart. Okay, first about this situation, how did I trade it? As you see, it is key level from which price bounced. When I saw this level, I saw that price came to this area, and even 4 hour candle closed below. After that, what I did, I set buy stop below, stop loss below key level, and take profit in 5 or even 6 times bigger. And that's all. After that, when price came back, rose up, I had my position, stop loss, and take profit, and that's all. That's the example. Where is it level? May, no, it wasn't in May, it was here. Oh, here you see it is 1 hour candles, and you can see that even here price retested this level, even price hit this, and after that retested, and you can see that here what happened. Price rose up, and after that rose up dramatically. Yes, you could open entry when price was above that level. There were a chance to open this entry by manually. December. No, it wasn't on December. Yes, here, this situation. Once more, how you could open entry. First, when price came back below, you can open entry only above key level. How you can do it? You can set buy stop, or if the price, like here, rose up from this key level, price rose up 30 pips, you can set buy limit. You need to understand you always need to open entry near the key levels. Once more, if price came to key level, you open entry here, you set buy stop when price below. If price came back and rose up like here, and you didn't open entry, you wasn't near PC, what you do? You set buy limit. Buy limit, it's buy below current price. Stop loss always below tail if it's normal stop loss, if stop loss is not more than 20% of ATR. About ATR, I'll show you how to count ATR in a few minutes. And that's all, friends. That's a free situation how you can open entry. Once more, example for you. First, price came to key level, you set buy stop above current price. Second, price came back and currently nearly key level, you open it manually. Third situation, if price came back, made false breakout already and rose up and moved away from it, you set buy limit. How you open entry and why you set pending orders. Pending order must be 2-3 pips above or 2-3 pips below current price. If you want to open buy, it must be 2 pips, 3 pips above. If you want to open sell, 2-3 pips below. Why? Because of spread, and sometimes price can hit by spread, but actual price didn't hit that level. That's important. Okay, let's go to volume calculation, and let's go to how to calculate volume in position and how to calculate your orders. About volume, when you trade Forex, you can use different services. First, I use baby pips, I use where is it? Yes, and I use this broker website. There could be different services which you can use for calculation volume, for calculation pips, which you need to use in your stop loss. And how you calculate your stop loss. And let's use this situation. Let's use this real situation. You want to open entry above key level, and you understand that stop loss we need to set below tail. Below tail plus clearance 2-3 pips. That's why our stop loss will be nearly here in this area. And after that we calculate what will be our risk. Our risk will be 35 pips. And just imagine you have account like I have 360,000, like I have this account. I have many different accounts, but this one which I use for public. And my current risk per position is 1,800 USD. Here you put 100, and like we said before, our stop loss will be 35 pips. And what we do? British pound, Japanese yen. British pound, Japanese yen, and what's the price of USD Japanese yen? 109.84. 109.84. Mm-hmm. $109.84. And now you see that our volume will be 5.64. Why it's important to have such volume and to open entries only with such volume which you will calculate? Because you need to have the same risk per position, only in that case your mathematical expectancy will work. That's why here what we will do, like at this moment, price rose up, and what we do, we set buy limit, just a minute, like we set buy limit. After that we use to set stop loss below for previous low here, and after that we set stop take profit in must be at least in 5 times bigger. Why it's important to have take profit in many times bigger? Because sometimes you will do mistakes, and it will save you your account from losses, and you will make more money. Because it's hard to it's hard to predict where price will change its direction or where it will stop its direction. That's why what you do, you set mathematical take profit, and that's all. And you have a position, and after that you wait. Once more about stop losses. Let's cover more stop losses. I think this situation is clear. If you will need better, explanation, you will write to us. We will give you a good feedback. About stop losses and about ATR. Where to set stop loss? Once more, you set stop loss below tail. According to first breakout strategy, the best place where you can set stop loss is below tail plus 2-3 pips for clearance, for spread clearance. That's all. If you have a situation where your stop loss would be like 50 pips, you can use lower stop loss. You can use mathematical stop loss. Also about stop losses, you need to calculate, you need to pay attention to ATR. What is ATR? A few seconds. It's a Forex volatility calculator. Why you should use it? Because here you will see how many pips per day price rolls up or drop, and according to it, you will understand what stop losses you can use and where you can set take profits. Because for example, like Euro USD moves per day 50 pips, and it's not wise to set stop loss on this instrument more than 30% of your ATR. I recommend to use stop loss 20-25% of your ATR. It will be like a maximum. You need to understand. You need to use as low for stop loss per day as you can. Example here, like British pound Australia, price average daily move 171 pips, or British pound New Zealand 181 pips, 181 pips, and our maximum stop loss could be 20%, like 36 pips. That's all. At this moment, I will show you some other real example where I open entries, and it will help you to understand better how to trade according to first breakout. Once more, about stop losses. Stop losses we set below tail. Just imagine, we have first breakout. We open entry here and set stop loss here. Take profit. Take profit, always better to say mathematical. Why it's important to say mathematical take profit, but not before some level, something like that? Because according to law of probabilities, according to law of big numbers, you will not predict when price will move, when price will change direction. For you, better to count on like to take 1 to 4, 1 to 5. When you will take 300 pips, my apology, when you will open 200 entries, 300 entries. After that, you will be able to understand in what cases you could use bigger take profit, in what cases you can hold it for a long time. I will show you some examples where you can hold position for a long time, why it is not good to hold position for a long time. That's why once more about this situation on British pound Japanese yen. How we open entry here, the same situation, and here price made false breakout, set buy stop, price came back, we have entry and set take profit. The same here, price broke it down, set buy stop, price rose up, we have a position, and after that you can set take profit. That's all. If you missed opportunity, sometimes if you missed opportunity, you can set buy limit. And if the price will do a retest, like here, price did retest, here price didn't do a retest. In some cases, price will do retest, in some cases, price will not do retest, and you will never predict when price will do retest. Like my entry on DEX. My entry on DEX, you see the price made retest, and I open a position here. Sometimes there will be like, you will not be able to open it because price will not come back. And like price will do false breakout, and after that will drop dramatically without any pullbacks. Okay, let's open real examples when price made false breakout and how you would trade it. Example here, German index. First, you could open entry here manually or buy a sell stop. Because if you would be here, you open chart and you see German index here. You set sell stop, after that stop loss below tail, and take profit in 5 times bigger, 4 times bigger. For freshers, I recommend to set take profit 1 to 3. You need to learn, and you need to feel market. You need to understand in what cases price can go more. When you You can hold position for longer. You can try to take 1 to 10 only if you open a position nearly such powerful places like historical high of 2018. Nearly the places, yes, you can set 1 to 10. In other places, it's not wise. Another example, Euro 50 index, Euro 40 index. Here, another example for you. Here we can use it. I wrote about this example for my on TradingView. I also wrote about it. You could find it. Key level, mirror level. Yes, it's not the best. It's not like clear mirror level. Sometimes levels will be a little bit not pretty nice. And take a look here. Price made this false breakout. How you could trade it? Price broke down. You set buy stop. You set stop loss below tail and take profit in 5 times bigger. Something like that. Remember, freshers, if you are a fresher, you need to learn how to take 1 to 3. You can try to trade 1 to 5 only when you will get more experience. Another example for you on Euro 50 index. Another mirror level. Why this level is important? Because price might rehide this trap. This level, that's why it's important. And false breakout here. How you could trade it? If you would be near PC, you could open a position. Price hit it, price broke it up, you said sell stop loss above tail and take profit in 5 times bigger. That's all. You need to understand, in most cases you will not take all the move. If you will take some part of that move, it will be awesome for you. Another example of false breakout, British pound, New Zealand. There could be a different situation. Just imagine, if to be honest, I saw that situation and it was Friday before weekends, and I didn't open entry because Brexit news, something like that. It was too risky for me. And here you see the price drop. You can set sell limit here, stop loss above tail, and take profit in 5 times bigger. How to calculate volume, I will show you. I will do additional lesson how to calculate volume. Once more, take profit. We set in. You need to set take profit in 5 times bigger, in 4 times bigger than your stop loss. About take profit, what's important for you? You need to pay attention to technical ATR. What is ATR and what is how to use ATR in your trading. Mostly we will use ATR when we will speak about breakout strategy and bounce strategy, because just imagine we have a situation that price will move per day in average 80 pips. 80 pips, price will move per day, and also there could be technical ATR. Technical ATR, it is a distance between powerful levels. And just imagine, you have some mirror level here before powerful level, and you want to open a sell here. Huge probability the price will bounce and will break your formation. Additional examples how you can trade false breakout here. British pound, Australia. Where I took this level, I took it from this place. It is a paranormal candle. You can see 17,000 pips price came to it. And here what happened? Here, if you would set sell limit, if you would open entry here, you can set stop loss above it, and after that take profit in few times bigger. To be honest, price dropped down 1 to 10. At this moment I wait for where is that instrument? To be honest with you, at this moment I wait for this instrument, if that instrument will show a false breakout. For me it's interesting to see and how I will trade it. First example for you, real example, real chart. USD Singapore. At this moment I'm at PC and I will be at PC a few hours. If the price will hit this level, and what I will do, when price will hit it, will rise up, I will set sell stop below it, and take profit will be above tail, and stop loss will be above tail, and take profit in 5 times bigger. That's my goal. Another example of instrument which looks pretty, no, it doesn't look pretty interesting at this moment. Another example of false breakout and how you can trade it. Some of you can trade different instruments, like some of you can trade Bitcoin or some other stuff. And let's open Bitcoin. You will see how this strategy works with that instruments. few seconds, friends, few seconds. A few seconds, I hope you can wait. I understand this lesson is so big. About stop losses, take profits, I think I need to do another additional lesson where I will record how to set stop losses, take profits, and how to open entries with examples. I will do it because it's also it took so much time, and I think it's important for you to take a break. That's why one more example for you on Bitcoin, and after that we will finish it. Because many of you ask me, does the strategy works on different instruments? And here will be example for you. Bitcoin key level previous low, and what happened after that? The price made false breakout. How you can open it? Just imagine you sit near PC, you saw price broke it down. After that, you need to set buy stop loss below it, and take profit in 5 times above it at least. And after that, Bitcoin tried to build some levels, but to be honest, they are not pretty nice. And sometimes you see that there will be some mirror levels, but they're not such pretty nice. And here you can open entry buy market. And what you do when you have something like this, you have a situation when price just bounces from key level. I'll show you example where you can set low stop loss and where you need to set bigger stop loss. We will do additional lesson for it. When you have some situation, you need to set bigger stop loss because still there could be bounce, still there could be retest, and only after that up price. Example like here, price came back close to key level. Some people could open buy here, but eventually price made really low, and only after that up price. Friends, write down all your questions which will help about this topic. We will help you to trade it better. Also, there will be more additional lessons how you set stop losses. Example with entries. I will record you all my entries. I will record you at least 10-20 examples how I open entries and explanation. It will help you. Also, I will show you in what cases you can set lower stop loss. In what cases you need to have bigger stop loss. That's why what you can do. You just need to first build key level. You need to wait for false breakout. You need to you need to open entry above or below key level. It depends if price came to key level, made false breakout, you need to think about sell. If price drop and hit key level down, you need to think about buy. Thank you for your time. See you in next class.